Bharat Stage 6 norms are yet to come. Those will be way more stringent than the Bharat Stage 4 norms currently are. Also, there's still some hope in the sense that vehicles that are 10 years older will be off the road soon. So there's still some measures in place to tackle pollution. Let's just see what happens going forward from there. But moving on from that story to the big earnings today, just as Raghuram Rajan's tenure comes to an end, India's public sector banks are showing signs that they could be turning the corner. In fact, India's largest bank reported a solid set of first quarter numbers. The major kicker was the sharp improvement in asset quality. Here are the key highlights. So starting from number one, slippages in this quarter is just below 9,000 crore rupees for SBI. That is more than a drop of 70% on a sequential basis, and gross non-performing assets saw a marginal spike, mainly due to the loan book declining by over 6%. So net profit and net interest income beat street expectations to cap a stellar quarter as well. SBI Chief Arundhati Bhattacharya said that the worst is over as far as bad loans are concerned.
Watchlist number we had put out at 31,000. We will retain it at 31,000. So about that number is what we are still looking at as the accounts which are displaying stress and which need to be very carefully followed. Slippages have come down from 5,049 to 4,122. Quite a substantial improvement. Guidance of 12% around. And we believe that we will achieve that. So last year also we gave a guidance of around 13 to 14 and we achieved about 13.5. This year whatever guidance we have given, we are quite confident that we will achieve it.
And it was not just State Bank of India. Bank of India also showed signs that asset quality is on the mend. So provisions were down nearly 50% on a sequential basis. So gross NPA showed a marginal uptick. But just like SBI, this was due to a drop in loan growth. So two banks reporting stable asset quality today. This was largely been the trend this quarter, barring a few exceptions. So does this signal the end of the bad loan monster? Lata Venkatesh is here with her take. Lata?
Well, the results of State Bank of India and thereafter even Bank of India indicate that the long pain of bad loans seems to be ending for both these banks, and together they account for about 30% of the banking sector. State Bank of India first, that big boy, the slippages or the fresh creation of bad loans was as low as 8,790 crore compared to 30,300 crore last quarter, that is just 90 days ago. There are more promises from the management that they will be able to contain their operating expenses to less than 10% or around 10%. The cost to income ratio will be brought down from 49 to 45%. So improvement all round. There is still a watch list of about 27,000 crore, but the manner in which the bank has shown much more controlled slippages, it looks like there isn't much pain left. The bank got a 7% salute from the market. The Bank of India results equally impressive. The bad loans were the fresh bad loans were as low as 6,200 crore compared to 16,800 crore in the last quarter. Overall, gross NPA still remain at 13.4, but then that is because the total amount of loans has not grown. As that grows in the next few quarters by about 6%, which is what the management guided, it looks like that 13.4% GNPA will only recede. Again, the bank indicated that maximum over the next 3 quarters, they may have another 6,000-7,000 crores of bad loans. They have a restructured standard book of about 11,900. Even if half of that slips, the slippage is not going to be very much more than what we have seen in the first quarter already. That stock got a 10% salute from the market. The key point is that for the banking sector as a whole, State Bank of India and Bank of India indicate that the worst days seem to be over.